Hello, it's Kyle MacAlmon with eXp Realty, and it's time for your monthly market update for Northern Colorado. So we take a look at the numbers from this January, compare them to last January, and see where the market stands. It's been a crazy few months, so let's dive right into the numbers. First, we'll start with Fort Collins. And again, this is all for single family homes. So new listings, there were 190 new listings last January, and it's down to only 143 this January, about 25% less. Pending sales, we had 226 last year compared to 189 in this January, down about 16%. Sold listings, last January we had 166 compared to only 120 this January, down about 28%. The median sales price jumped up to $569,000, up from $461,000, a 23.4% increase, pretty substantial. Months of supply of inventory, we shrunk to only 3/10 a month of supply of inventory, down from 6/10 last year. And we want to be in that 5, 6, or 7 months of range of supply of inventory there available. So you can tell it's a very tight market in Fort Collins as well as most of the region around here. Average days on market was down to 38 days compared to 58 days last year. So homes are getting under contract very quickly. A lot of these offers are having quick closes with them, which are making them very attractive to sellers. All right, now let's take a look at the Greeley market. All right, in Greeley, new listings, there were 153 new listings, which is actually up from last year of 110, about 39% increase there. Pending listings, we had 181 that were under contract this January versus last year, which was 133. So while we did see an increase in the new listings, there was also an increase in the under contract pending status. And so essentially those homes that were under contract are taking away that new supply of inventory. Sold listings, we were down just a little bit, 94 compared to 98 last year, very close there. The median sales price though, last year it was $343,500. It jumped all the way up to $435,500, or about a 27% increase. We're talking about 1 year. The amount of money, if you're a homeowner right now in Greeley, you saw a 27% average gain on your equity that you own in your house. That's pretty impressive. The months of supply of inventory stayed very flat at 0.7 months, so still not a lot of supply out there on the market. And days on market was about the same as well, down to 44 from 45 days on market. So same situation there, homes are getting snatched up pretty quickly. All right, that was Fort Collins and Greeley. If you want to hear about Loveland or Windsor, check out the description below to find out those details. So now let's take a look at what this means for the broader market, specifically here in Northern Colorado. You know, interest rates on average for a 30-year fixed creeped over 4% for the first time in a while. The Fed has been signaling that they're going to be increasing these rates. And just yesterday, at the time of shooting this video, the CPI, or Consumer Price Index number, came out. It basically takes a basket of goods and measures the price increase, taking a look at it year over year on the inflation numbers. And that came in at 7.5%, which is actually the highest it's been since 1982. So you can see there's been a ton of inflation due to the money printing that's been happening with the federal government. Not a good sign for our pocketbook, our bank account. So basically what this means, if you're thinking about getting in real estate, it's a great hedge against inflation. If you already are a homeowner, you've seen those property values go up, like I mentioned, 27%, 30% in Loveland. That's phenomenal for a 1-year return. And you can see it protects against inflation, that silent thief that's stealing money out of your checking account. So if you're thinking about buying a house in this market, you might think it's gotten away from you or interest rates are on the rise. Yes, the interest rates are on the rise, but they're still historically low. And basically due to supply and demand, any Econ 101 class will tell you that limited supply and a great amount of demand is gonna equal a price increase. So chances are if you buy a house right now, you're still gonna see 10 or 15% appreciation over this next year, which is just a great way to put your money to work for you. You're able to leverage because you're only putting a small amount down to be able to take on that whole mortgage. So if you're a seller, now's a great time. It's right before spring season's heating up for selling homes. You might be one of the few homes on the market with several offers competing against each other to try to get your house. So if you have any questions or needs with real estate, I would love to be your go-to resource. Feel free to give me a call or text anytime, 970-227-2552. All right, have a great rest of your day. We'll see you next time.